Welcome to the Rich on Money Show. I've actually never called this a show before, but I might as well call it one. This is the Rich on Money Show, and today I'm going to talk about capital gains exclusion on real estate for military. And it's an awesome subject and something that a lot of people don't know about. But before I get into that, let me talk about Rich on Money, what I'm all about. I'm a YouTube page and a real estate blog where I talk about, if you're in the military, ways you can save money on real estate and maximize your finances. And I specialize in doing that for military folks. So check me out. If you like this video today, subscribe, thumbs up it, tell people about it, and I want you to leave a comment below letting me know what you think. And if you have any questions to ask about this particular subject, please do so. Let's dive into this. Let's get going. I want to get through this fast. All right, let's get these videos shorter and just to the point. Here we go. Do you know about the massive capital gains tax breaks for the military? This refers to real estate. It is the capital gains exclusion when you sell a property and you make money. Now, this is actually available to everybody, but it's actually a more souped up version if you're in the military. You get extra benefits if you're in the military, and this is a really good thing. You do not have to pay tax on all or part of the gain from a sale when you sell your primary home. A main home can be a house, houseboat, mobile home, apartment, condominium. And this is called capital gains when you sell something for more than you bought it for, and it's like an expensive item. Cars, stocks, bonds are all capital assets. A home is a capital asset because it's a significant piece of property. When you sell it for more than you paid for it, that's a capital gain. It's like when you buy a stock and then you sell it, and then you'll see all these forms you got to fill out for those of you that have bought and sold stocks and then filed your IRS forms, your tax forms. You got to pay taxes on that. But when you buy and sell a house and have a capital gain, and you do it under the right circumstances, you cannot pay for that capital gain. That's what I'm going to talk about today. And you need to meet the ownership and use test. So let's talk about that, the ownership and use test. If you, over the 5-year period before you sell the house, lived in the home and owned the home for at least 2 years, then you can exclude. Then basically, you don't have to pay. You don't have to pay the property tax. You don't have to pay the taxes on it. You don't have to pay capital gains tax. You can keep the profit. That is big, big money. That is a thing that you want. I was able to do that on one of my properties, and I wouldn't have been able to do it without the military benefit. And I'll talk about that in a second. But how much can you exclude? Is it unlimited? I mean, can you just exclude like $1 million, $2 million? No. Dream on. The U.S. government would never let you exclude that much. There are limits. If you're single, you can exclude up to $250,000. And if you are filing jointly, you can exclude up to $500,000. And this exclusion is allowed each time you sell your main home, but not more than once every 2 years. There are some people that are so good at this that they sort of flip homes every 2 years, live in and flip a home every 2 years, and they're able to do that tax-free using this system. So what's the deal? I have not told you yet. I've not told you what the armed forces side of this is, what the military side of this is. Well, if you live in the house 2 of the last 5 years, you can have a tax-free sale. That applies to everybody, military or not. So what's the big deal with being military? Why is it so special to be military? It's special because you get to tack an extra 10 years onto that 5 years. So for us, if you lived in the house 2 of the last 15 years, then it is a tax-free sale, and the capital gains are yours to keep. Instead of 2 of the last 5 years, 2 of the last 15 years. That is a big, big bonus. Now we have to deploy, we have to move everyone to 3 years, and that makes it really, really hard to satisfy the 2 out of last 5-year rule. But 2 out of the last 15 years, now that's a bit easier, and that gives more time to build up equity in these homes. All right, so this is awesome. So make sure you take advantage of this. Now you have to be on qualified, official, extended duty as a member of the armed forces. I'm going to read what that means. That means that you have to be at a duty station at least 50 miles from your main home, or live in government quarters under government orders, or be on extended duty when you are called or ordered to active duty for a period of more than 90 days or for an indefinite period. Kind of just being on active duty is a pretty easy way of satisfying this. And then, of course, you don't want to be like stationed less than 50 miles from your primary residence, or that kind of screws it up. You need to have to be sort of called away from your primary residence, like to a different state or something, or somewhere a bit further away. So let me tell you the story of my primary residence, which is really the only primary residence I've ever had. I bought a house in Alexandria, Virginia in 2003, a townhouse for $280,000 in, what month was it in? I think it was in June of 2003. Or no, it was August. August of 2003, I bought a house for $280,000, a townhouse. And then I sold that house in 2016, all right? 2016, I think it was June, for more than $400,000. So I made a good, decent chunk of change. I had capital gains. That was 13 years, I think. So under the old system, where you had to be, or I'd say under the normal system, where you have to live in the house 2 of the last 5 years, I would not qualify for a capital gains free, sale. And I'd have to pay taxes, just like if it were an investment property or something. I would have been screwed. I would have had to pay a lot of money out of pocket, or I'd have to take a good portion of that appreciation and give it to Uncle Sam. However, with the military sort of exclusion on this, where I could add 10 years, 2 of the last 15 years, that brings me to a max of 2018 instead of 2008. I qualified, and this house was a capital gains free sale, and I kept all the capital gains, and that made a large difference to my bank account. So thank you, Uncle Sam, and make sure that you guys take advantage of stuff like this. Important notes to remember. If this is helpful today, give me a thumbs up, subscribe. Hey, leave in the comments where you're listening to this from. I want to hear from you guys, all right? You cannot apply this rule to more than one property at a time, all right? Stop trying to cheat. It's not going to work. According to the IRS rules on capital gains, this rule can also apply to taxpayers who have recently left the military. What does that mean? It means that if you separate or retire, and maybe 6 months or a year later, then you sell your house, apparently this can still apply. So this doesn't end the second you separate from the military. There's some leeway. I don't know how much leeway exactly, and that is actually unclear, but talk to a tax attorney, talk to a tax specialist. You might be able to take advantage of this. This is in the tax code. I have links to it. So you might get away with not paying capital gains, but when you sell a house, even if the capital gains are, yours to keep, you will have to pay something called Depreciation Recapture. And that means, it's kind of complicated, but the whole time that you own a home, you're able to depreciate it every year. And that just means that you're saving money on taxes every year by depreciating the property, depreciating the building, and in some cases, items that are in the building. And depreciation is an awesome thing, and it's a tax savings, but it is, in many cases, a temporary tax savings. And that tax savings is recaptured by the government when you sell the property. And then they get it all back, and in some cases a little bit more. So just keep that in mind. And I have a link if you want to understand more about that in my blog. I'm not a tax attorney or a CPA, so you need to check your situation with a professional that's a little bit smarter than me before making important financial decisions like trying to do this on your own and then just referencing my blog when you get audited. That would not be a good idea. Don't do that. Have you taken advantage of this awesome opportunity for military members? Any questions about it? Hey, leave a comment for me. And if you have any questions, let me know. This is the Rich on Money Show. Peace out.